There are some financial models that are giving investors a sense of certainty, but they turn out often false, even if based on rational premises. That predestination, that number will go up or down, are very often harmful, but surely giving a boost for newcomers to the appetite for quick gains. Today we will discuss about charts that deserves all the mockery that didn't work out and tricked millions of investors around the world in terms of crypto markets. So about this and other topics, as usual, welcome to another episode of Blockrevision. So let's begin. And we are starting over with economy view. What we got out there? Great speculation on interest rates began, and we can find that Mr. Jeremy Powell has recently gave kind of a hope to the markets that they will hike interest rates by solely 0.5, not 0.75 that they used to. So there is a tendency that this pace will slow down. That's what the market is betting on. But does it make it right? On the other hand, if we just make take another side on yesterday, we had U.S. retail sales being published. That was the biggest increase of figure in 8 months that outpaced estimates and indicated Fed tightening has further to run on stymie inflation. Also, right after this, the S&P 500 and the Nasdaq 100 fell after, and that also there also might be a further room to drop. So it's indicating that the economy can withstand additional Fed hikes. So my question is whether the markets are overinterpreting the Fed path, that they will slow down and eventually put the pedal to the metal once again. So there are financial risks that shouldn't shape Fed rate decisions. NY Fed chef has recently said. So using monetary policy to mitigate financial stability vulnerabilities, as that can lead to unfavorable outcomes for the economy, what Williams says, and bringing to mind, Williams is trying to bring to mind that the primary goal of central banks is to provide their country's currencies with price stability by controlling inflation. Right now, we are making the other, where we would need to tackle with inflation. We are right now taking some measures in order to pivot, and there may make the markets confused. So my take is that it's too late for now to tweak. The need for meaningful progress, the need for meaningful progress on strengthening the resilience of core financial markets is clear. But in order to build resilience, we need to construct this during good times and not the bad times, when economy is shaking and many companies are on the brink of collapse and wave of redundancies. So there is a massive disconnection between what we see and what we would like to see in a healthy economy. So lower liquidity implies that there might be a liquidity shock that will have larger than usual effects on prices, and perhaps that will be more likely to precipitate a negative feedback loop among assets. So right now, taking that approach of going into handling with inflation is by many the only one proper step. Afterwards, however, we would need to take care of the markets. So whether the market will listen to what Williams say, yeah, I do think so. We already had those sell-offs on major indexes that brought prices down few percent. Right, we are jumping straight to a crypto outlook right now. So what we got right there. Cataclysm ahead. The question is, as we are getting over to this chart, I just wanted to pop right here the chart provided by Cambridge University that is putting in the limelight Bitcoin average mining costs. So on your right, you can find that Bitcoin per USD is right now around 16.5 thousand, whereas Bitcoin average mining cost is 20,000. So around and that oscillates obviously every day regarding what's the hash rate is and what's the price in the majority of jurisdictions. So right now, as we have collapsed below the profitability threshold, there might be a catalyst, kind of an igniter, that may open a more difficult phase back as it was there in 2018, where we had the major slump of crypto markets, cryptocurrencies valuations. So putting 2018 as an example, there might be a very difficult time for miners, where after this very positive period, we may have the weak miners that will get eventually weaker after those energy prices surging, and obviously after hash rate still having its highs, the areas around highs. So through observing consumption of electricity and daily issuance of Bitcoin, we can right now find out that we are not lucrative anymore, and obvious fact is that when mining costs are higher than miners' revenue, number of miners will decrease. So that's something to ponder for you. Just take a notice that it would be much better for you to take a gradual investments if you're already the beginner into a Bitcoin market, where I would rather recommend to make a dollar cost average method, where you're buying Bitcoin with a specific amount of money every month, and not in a one turn. So that's the miner side. Right now we are jumping into the Puel multiple. So a Puel multiple, that's one of this mathematical models that may find the places where the Bitcoin is extremely low or extremely high. So the pure multiple by large is calculated by, as you can find, dividing the daily issuance value of bitcoins in USD by the 365 moving average of daily issuance value. So the chart above right here is finding that there are periods where value of Bitcoin issued on a daily basis are at extremely low territories. And if you're buying at those territories, you may have possibly an outsized return for Bitcoin investment. So that's always better to buy around these areas where we are at now rather than at the highs. But that also makes it tricky. If you're looking at extremely high levels, you may find that it may provide advantages, profit taking for Bitcoin investors, but as history tells, those who are looking for extreme highs this cycle could got disappointed, as we haven't got just touched slightly this pink area. So that's just one of the example of what model might be useful in terms of entering the next cycle, whereas you need to be very cautious, as every single cycle has its own devil, I would say, its own devil. So that was the pure right now. The second one of the most important mathematical model, MVRV Z-score, that is using that is calculated by using current price of Bitcoin multiplied by the number of coins in circulation right after you have realized cap. What is the realized cap? To say the price of each Bitcoin when it was last moved. So it's a short-term, I would say, price that's calculated in this equation, and also you have standard deviation that pulls out the extremes in the data between market value and realized value. So that's very important to find it right now, as we are getting into lower and lower levels. That might be an indicator of hitting, possibly forming a bottom where the floor might be set. However, better not to forehead the market, and better hang on for the obvious signs of a reversal. Otherwise, you may get literally fall into real pain. So one say that the capitulation period is over us, so that's just a kind of a milder slides that right now we are performing. The other, however, may say that real capitulation is over, but taking into consideration that the miners and also the exchanges and those liquidity providers still have some issues, I won't find that there might be a clear pivot in that terms right any moment. So Bitcoin rainbow price chart breaking down, and that's what was hitting up the Bitcoin market throughout recent years. Right now is collapsing. So those models, many of those models has been created in 2015, 2016, and right now we are reverting from many of them, as those elements are not longer useful. So to date, Bitcoin price has continued to stay within this rainbow color bands of the logarithmic growth channel right now. As you can find, the new mathematical model needs to be provided. So it looks like the only one useful for now, MVRV and Puel multiple are the kind of projections that might be useful. And as always, look at the sentiment on the market. If you not know maybe what is going on with technology, you may find out what's going on the sentiment with the market, and when it starts improving, you may seek for the possible bottom. All right, and that's what I need to say at the end is seek for another story. So that type of chart, as you have right here, has assumed that we will go to $100,000 already in 2021, but that didn't work out. So that was the one of the projection that also pushed many retailers buying buying power to $70,000 back in 2021. And so there were some hopes that Bitcoin will eventually end up at around 100K previous year, but that hasn't succeeded. That model hasn't succeeded, and in order to push another market, the cycle once again forward, we need another story. What might be the story that this time that will push the market in 2023? That's very interesting, but definitely this CBDC development and also turn into more digital world will eventually support the valuations on cryptocurrency market. But in order to stay in the game, remember about much of a cautious and diversification. That's why don't seek the exact bottom, but better seek for tendency, where we are going next in terms of sentiment and also the condition of the market. So right now the question is, who is buying? Whether there is any buyer right now, or everyone has been already in reverse. So we have recently got to the information that ARK Innovation the fund is has decided to buy the GBTC stake when during the crypto bull market. This type of asset was literally been in a high demand. Right now it's languishing near on unprecedented discount relative to the value of its underlying cryptocurrency. So Katie Wood is buying the dip in this Bitcoin fund, and as sentiment being bruised. But whether it's the total dip of the cycle, we don't know it yet, but it's always better to DCA, as I said, than rather to wait for the one slump to buy it all. So DCA is definitely a better strategy than when she was buying up many overvalued cryptocurrencies and companies with her flagship strategy, buying any destructive technology, no matter what prices. So ARK Innovation ETF recently also surged by a couple percent on the stock market, but whether it's also the question to buy the RKK index right now. I think that there are many disappointed investors that were buying the ARK that has got eventually turned up very badly, and with this previous spike of the price, there will be rather for them to the possibility to jump out of a ship rather than load up more. So there were much of a disappointment. That's why I do find that this cycle of crypto and also the market should go throughout the cycle of kind of a bigger disappointment and doubt that will lead to the spring of another bull market. Okay, so that was out of the crypto. Right now, let's get to market movers and let's jump to economic calendar. Let's jump. Oh yeah, this week what we had yesterday. There was on Wednesday PPIs from Great Britain that were more or less as forecasted, but mainly lower. But we have talked over that data. Oh, there are too many figures. Let's jump to Wednesday once again. We had balance of trade for Japan that is lower than expected, and unemployment rate from Australia that's around the forecasts. On Thursday, what we had on Thursday from Great Britain, there's UK autumn statement and Bank of England speech that we are already through. Housing starts from US. Let's have a look at this. So definitely the housing market is in reverse, and building permits that that been fledgling right now is revolving around 1,550 and hundreds, 1,600s. So we are awaiting on some of the speeches of Fed in order to verify what's the situation in their terms might be. And right after we have inflation rate out of Japan, and tomorrow retail sales from UK. So those speeches are yet to go through, and we'll get you updated in terms of what happened on them tomorrow at 8:45 a.m. East time. If you haven't noticed, there's an open chat right here, and you may pose questions on the subject you would like to listen to. Right now, as anticipated, let's have a look at trade idea. So on trade idea, what we got out there, let's get to Doge to USDT. So previously we have that massive spike on Elon Musk buying Twitter. There was some speculation that the main cryptocurrency on Twitter may be Doge, as Elon has supported this cryptocurrency previously. there were massive spikes where we are right now selling off through. In terms of Doge funding rates is this very helpful tool to measure the sentiment of the market, whether the traders are betting up or down. There were mainly bets upwards. On the market, we virtually say that the majority of the crowd need to lose its money. If we on the side of the minority, that might be a better side than the majority, unless we are in a very strong bull or bear trend. But if we are in a decisive point, as we are right now here, after this pennant triangle being formed, we might be on the brink of a further sell-off. So Doge already started the sell-off after breaking out of this ascending triangle. After breaking down of this boundary, we are right now forming a falling structure. Right here we have had a weak bearish week that right now has stopped Doge from falling, but after this stoppage we may find that another type of consolidation has been constructed, another pennant that right now we are breaking down again. So for now, that's like a quick type of an action. If you want to just get some chunk of this type of trade, you may bet a position against Doge right now with let me find out with protection right over there, and with the protection will be right above those up wicks, and that's risk reward ratio at 4.19. So that's kind of a lucrative if you ask me, and I do decide to put a profit, set a profit boundary at 0.078, where those previous lows might be found of 11 of November. So it's always the question of what type of leverage you want to use. Right now I do recommend not bigger than 10x, but always if you want to have a larger, better be very cautious in terms of reversing the price to those levels we were before at. I would lower the exposure, or even cut it to a very low percentage of the initial one. In terms of area of a trade, I still do expect that this area is the one you may take this trade. And if you take the trade from any higher and lower point, adjust your trading board consecutively. So I do find that's it in today's episode. Thank you very much for watching, and if you have any questions, as always, just put it in the comment section below the video. So that was it, and I'm inviting you to the episode tomorrow, quarter to 9 a.m. East time. Bye bye.